Hello, and welcome to our new video series, How to Apply IFRS 16. I'm Jessica Torre. I lead our global technical team for lease accounting under IFRS. In this series, we'll be exploring the numerous challenges of how to apply this new lease accounting standard, focusing on practical tips and insights from our experiences whilst working with clients. I'm joined today by Richard Brown from our global technical team. Richard, could you summarize how the accounting will change under IFRS 16?
Absolutely. Thanks, Jessica. So by now, people probably already know the headline change. Lease liabilities and a right-of-use asset will go on balance sheet for almost all leases. The size of the liability is fairly easy to get a feel for. You can look at your operating lease commitments at disclosure at the moment and then just discount all those cash flows back to a present value. The other big change that is a bit harder to quantify is the change to the P&L. So it's clear to see the operating lease expense will be removed and will be replaced with depreciation and interest. The problematic part is the fact that the interest is front-loaded to the early years of the lease. So at the start of the lease, you have a big liability and you therefore unwind a bigger interest charge into the P&L. Across a balanced portfolio of leases, it might kind of average out over time. But if, let's say, you renew a lot of your key leases, so your long-term, your really material leases, then you'll have a big increase both in lease liabilities overnight and in the lease expenses in the coming years.
So it's really important to start finding your leases now so you can start doing the analysis on how big that impact is going to be on your balance sheet. Clearly there'll be other challenges, and IFRS 16 gives us lots more guidance on things to think about in terms of what's my lease term and how do I do discount rates, and all those things we'll cover in future video series. Why should people start now?
So I've spent the last 2 years telling people to start now. So we're very much at the it is late, you do not have much time, you need to start stage. So IFRS 16 is mandatory from 1 January 19. Depending on your transition approach, you might be restating the year before, so 2018. So you do need time to gather the information, to work through all those steps you've just talked about. But even once you've done that, to think about if you do want to reshape your lease portfolio, to let the board and the audit committee know what to expect, to let banks, to let your investors know what to expect. So you need time to work out what the impact even is for you, and then to set those clear expectations externally. Equally, you have to think about who in the organisation needs to be involved. So it's an accounting issue, sure, but it affects the level of debt on balance sheet, so Treasury are interested. It affects KPIs, so your remuneration teams are probably interested. It could affect procurement if you decide to lease or buy, and if that decision might change. So you need to engage a lot of people, do a lot of work, and do it pretty quickly.
Thanks, Richard. Well, I hope Richard's summary has brought some illumination to IFRS 16, and I hope you'll join us in future episodes where we'll be looking at the judgmental areas of IFRS 16. For example, how to deal with common clauses in real estate leases, as well as looking beyond the technical accounting and talking to experts in estimating discount rates, collecting data, and implementing systems. If you'd like to subscribe to future episodes, please click on the button below. And for information on IFRS 16, please visit pwc.com/IFRS 16. Thank you for joining us.